Deepak Jain, CMD at Lumax Industry, is now with us. Deepak, you just heard the management at Maruti. 40 years of completion, isn't that a big mark itself? Are they your clients?
It is an amazing achievement of Maruti Suzuki. In fact, yesterday I was there at the event. As Lumax Industries, we feel proud and privileged to be associated with Maruti for the last 4 decades. In fact, I mean, say we were the first ones to actually start the 800cc lighting. And it's a historic day for us because now there is also a launch of the new K10 Alto. And Lumax continues to serve that segment, the entry segment, along with other product portfolios.
All right. So that's somebody who's associated with Maruti Suzuki also expressing their joy and what is the outlook going ahead. So let's start with PV upcycle. There has clearly been an upcycle as far as passenger vehicle is concerned. You've been operating for 4-5 decades now. What is the general time lag before which it comes down to auto ancillary in terms of demand, order books, and margins getting better?
See, auto ancillaries always had a symbiotic relationship. Or rather, I mean, say the ancillaries are the one which actually make sure that the vehicle development happens on time, and we actually contribute to 60-70% of it. As far as Lumax Industries is concerned, I think 65% plus of our revenues come from the passenger vehicle segment. We've seen a strong uptick in the demand. We've been very fortunate that with all the major OEMs, we have actually a wallet share. We are seeing that in the next 3 years or so, because in lighting, because it's a very, very critical safety as well as a very, very critical aesthetic and performance-oriented product, we actually are the early movers in the development. We actually have a lead time and visibility of almost 3 years per se when it comes to product launches. With that, I think we at Lumax Industries are having about 1,000 crore order book, of which about 90% of it is on new product launches, new product vehicles. And we're also seeing a very, very robust transformation in terms of technology because the conventional lighting is now turning into LED lighting in all across segments, be it the passenger car, commercial vehicles, or even two-wheeler segment. So for us, I think it's a very, very exciting time as the market kind of transforms and starts to grow.
Right. Good afternoon. This is Cheryl also joining in the conversation, Deepak. And 30% of your actually total book right now comes in from electric vehicles. So could you tell us how do you see this contribution of the EV segment on your overall financial as well as order book for the next 2 to 3 years? And like we were just talking about Maruti at the start of the show and how you all are also tied up with Maruti. And now Maruti also is looking to get into the EV segment apart from Tata's and M&M.
Good afternoon, Cheryl. I think very pertinent question. Very happy to say that lighting is one of the product lines, maybe few product lines, which is EV agnostic. So for us, I think that helps because irrespective of the powertrain, lighting goes on all types of vehicles and all types of vehicle segments. We are also seeing that with the EV coming in place strongly in segments, the lighting have to make more lesser energy consumption products. Also have to go more lightweighting, and those are typical trends in any EVs. And that's where more of the LED adoption comes in our product category. Of the 1,000 crore order book which we have, yes, 35% is on EV platforms. But as I said, ours is an agnostic product as more and more of our established current players. So for example, all our top 5 players have actually announced to the market the EV platforms. And we are also going with certain new age EV players, especially in the two-wheeler segment. And that is helping our order book on the EV space as well.
So as you said that, your products are agnostic to EV and, you would continue to see demand. But, not a lot of players will be able to make EV-backed products or new kind of products will be needed. Can you talk to us about that opportunity?
I think in this company, Lumax Industries, where we have a 40-year partnership, again, in sync with Maruti Suzuki, we've also completed 40 years with our partner, Stanley Electric. They deal with lighting products. As a group, we do have in other entity, Lumax Auto Technologies, EV critical strategy, which we are going and playing, where all the other products which are non-lighting, we're actually trying to gear up for the EV revolution coming through.
Right, Deepak, let's talk about your capex plans for FY23. We believe that it is at around 80 to 90 crore rupees, but given a lot of OEMs have announced a very healthy capex plan, do you expect to up it going ahead, and should we expect additional amount coming in from Lumax as well when you go ahead and revise that capex plan, or do you expect to do capex of around 80 to 90 crore rupees for FY23?
Oh, for this fiscal is 80, 90, but I think last year we did invest 150 crores. Now, in a downturn market, we did already invest 150. And this was, as I mentioned before, that we do get a visibility of 3 to 4 years ahead on basically vehicle launch. And that was in preparation for that. However, I think with this uptick of market, we are in the process of evaluating all our regional capacities because we have plants across the region along and in line with our order book. And maybe post capacity optimization, we will actually be shifting certain line capacities in certain region and probably also evaluating whether we need a new greenfield project because some of our customers have very, very aggressive plans. So if that happens, that obviously will be additional capex. But as of now, we are looking at about 80, 90 crores to do the regional balancing of capacities.
All right, sir. Thank you so much, sir, for taking out time for us. Always good to get perspective from you. As we are speaking, markets are trying to recover. 17,350, slightly above that is where we are. If I'm not wrong, we're at the day's highest point. On that note, taking a break. Stay tuned.